Equity Mate.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Equity Mate.
Welcome to another episode of Equity Mates, where we are searching for Australia's next top trader. We're a podcast that breaks down the world of investing from beginning to dividend so that you can hopefully make some returns. My name is Bryce, and as always, I'm joined by my searcher-in-chief, head of research, brain trust, equity mate, Ren. How are you going, bro?
I don't know if I can continue with this intro.
We'll revise for next time then. So another episode in our Australia's Next Top Trader series. This episode, Ren, is all about playing the short game. We only have 6 weeks to trade here, Ren. Very short period of time, especially relative to the way that we invest personally and discuss on the show. You know, setting yourself up for success and financial sort of independence a lot further down the track. But unfortunately, if we were to hold a trading competition that went for 25 years, A, we would need a lot of content, and B, I feel like people would really tune out.
Yeah, I think daily podcasts for 25-year competition might get a bit tedious.
So 6 weeks, Ren.
Yeah, so look, investing for the long term might set you up for long-term financial success, but investing for the short term might set you up for a little free trip to New York. So there's definitely some upside in getting it right over the 6 weeks. And so we're going to talk about some tips that we've picked up, you know, through our experience on this podcast and through preparing for the competition that we reckon will hold you in good stead for the 6-week trading comp.
So we have a video where we sat down with Matt, CEO of Stake, who trades in shorter periods of time than we certainly do. Head to nexttoptrader.com.au to watch what his tips are to succeed in a short period of time. But this, as you said, Ren, these are some of ours that we've picked up over the sort of course of doing the podcast. So I'll kick it off, Ren, if you don't mind.
Yeah, go for it.
So we interviewed a guy called Chris Brycki, who's CEO and founder of StockSpot, and he holds the claim of winning the Australian Sharemarket school game back when he was in high school 3 times, which is an amazing feat. So kind of similar to what we're doing here. And his tactic was going in hard on one stock, backing it in, all his cash, and seeing what happened. And that's how he won it. He said that, you know, by doing so, you're all in. The gains that you would get from that obviously got him across the line. So that's something you could consider, is going all in on one stock, hoping for the best. And hoping that goes up in price, and you could be well on your way to New York.
Yeah, now he also flamed out a couple of times in the trading comp, we should say, in other years.
Yes.
So it's a high-risk, high-reward strategy, but there's no prizes for coming second in competitions like this. So It's probably a good strategy to pursue.
Now, in line with that, Ren, I've got a second one, and that is to... As you said, he didn't always succeed with that strategy. His stock might have plummeted, and I think my second tip is to sell your losses as quickly as you can, get out, because you don't have time to be waiting for stocks to turn around. That's not to say that is the best strategy, and by all means, you don't have to do it if your stock's starting to turn and you think otherwise. By all means, stay in it. But I think what we've learned over a short period of time is that if it starts to turn, it's an opportunity cost to stay in that stock. Take the cash while you can, or at least part of it, and move into another stock that may be going up. Don't stick around too long. You don't have time.
Yeah, nice. All right, 2 from me quickly. First one is that in a competition like this, timing is more important than being right. So what do I mean by that? You might have a long-term thesis. You might have an idea of where the world is going that could be 100% correct. Doesn't matter in 6 weeks. You know, will Amazon kill physical retail? Maybe, but probably not in the next 6 weeks. Will an emergent global middle class drive demand for Nike through the roof? Maybe, probably not in the next 6 weeks. Will Disney be the first of many content producers to pull their content from Netflix? Maybe, but not in the next 6 weeks. So you can be right, but if it's not going to happen in the next 6 weeks, it's as good as wrong. So that's important to keep in mind. You got to invest for what's going to happen in the next 6 weeks. You got to ride momentum more so than having like a thesis that you think is correct.
See, that's why you're head of research, Ren. So you've just given me an insight into 3 long-term trends that you obviously think are coming up.
And then that leads to the fourth point, which is tied to it. You've got 6 weeks, and you know what those 6 weeks are. It's going to be the 11th of March to market close on the 19th of April in America. Think about what's going to happen in those 6 weeks. You know, is Trump going to meet the North Korean leader, and could stocks be affected by that? Could, Lockheed Martin and the military contractors get a nice little bump? Or, there are companies that are reporting. So Adobe is reporting their fourth quarter earnings on the 14th of March. Nike is reporting on the 21st of March. Are those reports going to give the stock a nice bump up or bump down? Have a look at the calendar, see what's coming, and think about what will be a catalyst for price change, because that might be the thing that gets you over the line in the 6 weeks.
Yeah, nice, Ren. And reporting's a really good one. We will go into it during the competition on our weekly episode on Mondays. We'll let you know if there are any companies reporting during that week.
I'll give you the hint. I had a look at the investing reporting calendar this morning.
Yes.
Every day.
Yes.
Day. So many that you've never heard of every day.
Great. So that's an awesome opportunity to take advantage of short-term price movement based on reporting that comes out. So we will certainly be discussing that on our Monday podcasts. So there's 4 tips for you to succeed in a 6-week period. Obviously, all of them could be wrong. All of them could be right. It's up to you to decide which one you do. But from experience and talking with some of the experts, there are some ways that you can frame the 6-week period.
Equity mates and the people appearing in this program may have positions in the companies mentioned. This is general advice only. Please speak to a financial professional to understand how it may pertain to your individual situation.